Welcome to ShortView Trading. It's your morning market hit for Tuesday, 30th of June. What matters today for traders? Well, encouragingly for the bulls, the S&P is holding a whole bunch of key technical support levels. Amongst those are included the 200-day moving average. As you see in the chart in front of you now, if you use closing prices, it's dipped twice below that over the course of June and then rallied. Initially, that happened on the 11th of June when the market closed at 3,002 and then rallied the following trading session. That then again happened on Friday last week with the market rallying Monday yesterday. So twice it's held at the 200-day moving average. It's been key support. Equally, in terms of intraday prices, if you look at the 50-day moving average, that again is encouraging. Earlier in June, we dipped down sharply intraday, quite close to the 50-day, which was trending higher at that time. And once again, yesterday, we found key support of that 50-day moving average on an intraday basis at 29.83. Encouragingly as well, technically, a technical golden cross is coming up when the 50-day moving average will cross above the 200-day. That often provides key technical support. And as you can see from our pennant formation we've been talking about in recent days, we dipped out of it to the downside yesterday and then rallied back within that formation. So technically it's encouraging. There's lots of support levels that are suggesting the S&P should rally from here on a 1 to 2 week basis. In addition to that, you can see if you think about the market in terms of three big sectors, cyclicals, defensives, and tech/growth, both those two cyclical and growth areas are notably oversold on a 1 to 2 week basis. Clearly, we had some weakness in FANG stocks on Friday, some bounces yesterday. So if you look at the FANGs as a group, collectively they are now oversold on a short-term basis. You can see that in the chart in front of you now. Equally, cyclicals on a technical short-term scoring system are also oversold, generating a buy signal. So key parts of the market are ready and primed to provide some leadership on a 1 to 2 week basis, i.e. the cyclicals and the tech. Clearly, there's some nervousness about tech stocks with Facebook, for example, down so sharply on Friday, but only bouncing 2% yesterday. But having said that, other tech stocks did well. Tesla was strong yesterday, up 5%. Nikola, the new poster boy for tech traders, was up 6%, and Apple also rallied on the session. Other technical models also supporting the buy case, including the percentage of stocks above their 10-day moving average, which you see in front of you now, and which is back on buy. And also the average RSIs of all the S&P 500 industry groups, which is also on buy. Over and above that, our key short-term risk appetite models are also generating a bunch of buy signals. For the full detail on how we're playing this market and how all our models look, please see today's daily rag available to subscribers and through the website. So what are we watching today? Well, there's plenty of macro data out, particularly in the Eurozone and in the US. In the Eurozone, we've got CPI and consumer confidence this morning, London time. Over in the States, we've also got consumer confidence from the Conference Board. Added to that, there's some Case-Shiller house prices and the Chicago PMI. In terms of key events, there's a speech out from the Bank of England's Andy Haldane, the chief economist. He was the one that dissented at the last meeting of the Bank of England when they were voting on more QE. So it'll be interesting to see what he has to say about the economy, the signs of strength that he does or doesn't see. Over and above that, on top of that, key today is the joint testimony of Powell and Mnuchin in the US Congress. So that's it from us. That's your morning market hit for Tuesday, 30th of June. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe, trade well.